Uniswap just announced that they're releasing their Unichain L2, slated for 2025 to go live. They have the testnet coming up here pretty soon, supposedly before the end of the year. So in this video, I'm going to talk about how it's going to be beneficial for swappers, the crypto space in general, and how it's going to be beneficial for us yield farmers, aka liquidity providers. All right, so before I get started, I do have to say none of this is financial advice. These are my own perspectives, research, and opinions, and they should be treated as such. So without further ado, let's jump straight into the video. So Uniswap is a decentralized exchange, right? They were the first decentralized exchange, and they are the largest decentralized exchange by volume and TVL. They even have certain days where they do more daily trading volume than Coinbase. If we look on DeFi Llama, you can see that it's $81.2 billion locked in DeFi. And of that, Uniswap is number 7 in TVL with 4.86 billion, right? They're the number one DEX, like I said. And their next competitor is Curve with 1.87 billion. So around 3x more. DeFi Llama also has a feature where you can view protocols treasuries. And you can see that Uniswap does have the largest treasury or war chest in crypto. They have $3.21 billion, $997 in stablecoin, $362 in Bitcoin and ETH, majors, nothing major, no pun intended, and $3.2 billion in their own token. More on the Uni token later. They're doing something really cool with the Unichain that makes me more bullish on the Uni token. Uniswap also pioneered concentrated liquidity, which allows you to provide liquidity in a given price range versus just from whatever the price of the pair is. So you can provide liquidity from, let's say, $2,271 to $4,400. And anytime you're within that range, you're getting paid passive income, right? And all of the other decentralized exchanges followed suit. And that's kind of been the trend with Uniswap. They've been a trailblazer in the decentralized finance space. And all of the other DEXs are just copying what they're seeing Uniswap do. And I wouldn't be surprised if we see other DEXs launch their own layer 2s. Okay, so before we dive into the docs, just to clarify, Unichain is a layer 2. But they are layer 2 launched on another layer 2. Just like Base is. Base is built on Optimism or the OP stack. Unichain is also built on an OP stack. So they just turned a Superchain because they call Base and Optimism mixed together the Superchain. So now with Unichain built on Optimism, I think we can call them the super duper chain, right? So for those of you who are watching the channel for the first time, let me break down what a layer 2 is and why it's beneficial / what problem it's solving. Right, so there's this thing called the blockchain trilemma where you have decentralization, security, and scalability, aka transactions per second. Each blockchain, at least as we're in the dial-up stage of the blockchain right now, is optimized for 2. So you have Ethereum and Bitcoin, famously known for their decentralization and their security, but they're not that scalable, as Bitcoin can only handle around 7 transactions per second, and Ethereum can handle around 14 to 20 something. I think it increased after ETH 2.0, but I just don't recall. It's really late. I'm shooting this video. I'm like about to fall asleep. But part of the ETH roadmap is to increase the transactions per second, hence where layer 2s come in. So any blockchain is in the business of selling blocks, right? So only so much data can fit inside each block. So they need to come up with a way to where you can free up block space so the gas fees can go down. So there's 3 parts to a blockchain. You have the consensus layer, which says what's true. For Ethereum, that's proof of stake. Bitcoin is proof of work. You have the data layer, which is storage. You hear about these parallel blockchains that run alongside of the chain so you can store all the data. And then you have execution, which is your computational finality, right? Right now, all 3 of these things are happening on the layer 1s. This isn't just true for ETH, but all other layer 1s as well. Now, layer 2s are designed to take the execution part and have it on the layer 2. And this is why they call them rollups, right? So you have optimistic and ZK rollups, hence we're talking about OP, part of the super chain. So what they do is they roll up all these transactions into the smallest amount of data possible, and they submit it to the layer 1, in this case Ethereum, and it frees up block space because it's less data. It's just like going to a bar. I give this analogy in all of my videos when I talk about L2s. If you go to a bar, you don't swipe your card every time you want to buy some food or buy another drink. You swipe it once, open up a tab, get your food, get your drinks, whatever, and then you pay for it all at once at the end of the night when you close your tab. If you didn't, and you have to get in line every time, the bar wouldn't make as much money because no one wants to keep waiting in line. You're going there to socialize, and it wouldn't be as good of an experience either. It's the same thing with blockchains. So when you roll up these transactions, it's just like compressing something you're gonna send in an email. You compress it, and then you're able to send in the email. If you don't compress it, it doesn't fit in the email, or it takes forever to load up. And then once the person receives it, they can unzip it, and then they get all of the data. It's the same exact thing. So this is freeing up block space so that Ethereum transactions can be faster and cheaper. And the cool thing about Uniswap's Unichain L2 is that you're actually going to be able to build dApps or decentralized applications on top of it, right? It's not just going to be Uniswap. I don't know what's going to be built. I already made a video talking about Uniswap hooks and how I think it's going to obliterate all DEXs. I recommend you guys watch the most recent Bankless podcast episode where Hayden Adams was on there talking to the guys, and he was talking about this. Uniswap hooks haven't been launched yet because they're still going through the audits, but once that launches on top of this, Uniswap is really creating a strong moat around their business. So without further ado, let's jump into the docs and start talking about Unichain, what problems it's solving for swappers or users and liquidity providers. All right, here we are. Unichain, an Ethereum L2 designed for DeFi. So I'm not going to read this word for word, but I'm going to read the important parts and just, break it down for y'all. Make it simple so you can understand. So it says over the last 6 years, Uniswap's processed $2.4 trillion in volume, scaled to millions of users, and totaled almost 500 million lifetime trades. But it says DeFi on Ethereum still faces challenges. Unichain is the contribution to fixing these problems. So let's start with the first one, low cost while furthering decentralization. So it says Unichain is designed to leverage and accelerate Ethereum's scaling roadmap, moving execution to the L2 like I talked about in the beginning of the video. So this means in practice, Unichain will lower transaction costs by 95% compared to the Ethereum layer 1 in the short term, and even more over time. And it says Unichain will also introduce a decentralized validation network that allows nodes to verify blocks. This adds an additional layer of finality and reduces the risk of conflicting or invalid blocks. And if you read the actual Uniswap white paper, which here's the website here. In order to be a validator, it says right here, you actually have to stake Uni tokens on Ethereum mainnet. So this is what I was talking about in the beginning of the video that makes me more bullish on the Uni token. They're already, paying out a yield to the stakers, but now you have another place to stake. And when I say stakers, like people who stake to, vote on proposals and things like that, because, Uniswap's a DAO. But now you actually be able to stake to be an actual validator. So I don't know how the staking mechanism is going to work, but usually it's some type of form of like the longer I stake the tokens, the higher the yield I pay. This is good for the token because it's locking up tokens. Less tokens are on the market to sell, price go up. I like that. All right, next one. Fast with near instant transactions. This one's huge. So it says to bring the next generation of markets on chain, DeFi needs to be faster. Unichain will launch with 1 second block times and will soon introduce 250 millisecond sub blocks that will make user experience feel instant. Faster blocks will also boost market efficiency and lower value lost to minor extractable value. So on the Bankless podcast episode, Hayden Adams was talking about, to have a good UI, especially in the modern world, things have to be instant or at least seem instant. So he's, like I just read to you guys, they're coming up with these faster blocks, faster transactions times. Now, this is kind of like when you buy something on a card. When you swipe the card, a lot of times the transaction doesn't go through yet. And that's why when you check your bank statement, it'll say processing still, or whatever bank you use, they might use a different word, right? Same idea here. It shows on your balance, right? But if something goes wrong, it'll get kicked back. But most people are going to do a transaction with the money they have in their wallet, et cetera, et cetera. And this is why they have the validators, to make sure that legitimate transactions are being pushed through. And it says this improvement is made possible through a block builder developed in collaboration with Flashbots that uses a trusted execution environment. So it says in addition to improving speed, the TEE, trusted execution environment, is designed to improve the transparency of transaction ordering and prevent failed transactions. All right, let me break down Flashbots for you guys. And I was big on Flashbots. I used to buy this project back in the day called Alchemist. And I think they're the group that pioneered Flashbots. So I kind of forgot. So I pulled it up on ChatGPT just to get re-familiar. So it says here, Flashbots is a technology designed to mitigate issues related to MEV, minor extractable value, which refers to the profit miners or validators and proof-of-stake networks can make by manipulating the order, inclusion, or exclusion of transactions in a blockchain block. Flashbots offer several benefits, particularly in the Ethereum ecosystem and other decentralized networks where MEV can pose significant challenges. Here are the benefits. So before I even talk about the benefits, miner extractable value is basically, this is how it works. So you have what's called a mempool, where you have all these transactions go to a pool. And all these transactions have a price tag on them. And the miners, obviously, they want to pick the highest ones. And this is why when you do a transaction and you pay more, this is why it gets finalized more, because the miners will pick that one up first because they know they'll get paid more. And this is a big reason why EIP 1559 helped with that, because that base fee made it so that fees are algorithmically set to the lowest amount, because a lot of people were paying high fees, but no one knew what other people were bidding. Unless you understand GUI and know how to read the transaction manifest and a bunch of complex stuff that will keep mainstream adoption from adopting this stuff. So EIP 1559, like I said, made it so that fees were algorithmically set to the lowest amount possible so that people aren't just overbidding without knowing where the floor is. Okay, so let's talk about some of the benefits of Flashbots. So it allows users or bots to submit MEV extracting transactions directly to miners via a private communication channel by bypassing the public mempool. And I was just telling you guys about the mempool. This reduces the need for bots to engage in price bidding wars, which often drive up gas fees for all ETH users. So the benefit, lower gas fees for everyone by reducing the competition to front-run transactions in the mempool. Without flashbots, MEV can lead to inefficient and harmful practices like transaction reordering, sandwich attacks, and front-running. So basically, the miners, they see all the transactions in the pool. They might see a big transaction. They might, buy that asset and then do the transaction so that the price can go up. This is what they do. Stockbrokers used to do back in the day before you can just buy on the phone. They see a big order coming in, they might buy some personally, then they put your order in and makes the price of theirs go up, then they sell it. And by doing that, that also affects the price of what you're buying as well. So it's just like different little ways to siphon off money and fees from you. It's theft, let's be honest. Call a spade a spade. It increases miner revenue. So with that private channel, like you were saying, it has a private channel. So it's almost like you throw the mem in the mempool, but you know who some of the miners are. So it's like, yo, I'm gonna throw this in here, but if you want to get this nice transaction or this reliable volume of transaction, give me this discount. So that way you don't risk other miners picking it up, right? So the miners get to make more money. We already talked about censorship resistant and front running. So in summary, lower gas fees, fair transaction processing, higher revenue for the miner, improved transparency, enhanced user experience, and better network efficiency and less congestion. It fixes things logistically. All right, the next one is seamless multi-chain swapping. So it says, as Ethereum's scale and roadmap comes to fruition, there will be many L2s. This is already underway, and while new L2s have helped lower costs, they have fragmented liquidity and created poor user experiences. So you have liquidity on Arbitrum, liquidity on Optimism, liquidity on Mantle, liquidity on Polygon, liquidity on ZK Sync, ZK Scroll. You have all these different L2s, and they can't talk to each other except through a bridge, right? So liquidity is fragmented instead of coming together. So let me keep reading here. Unichain is built to enable seamless access to swapping no matter what chain users are on. So it says, a part of the Optimism Superchain, we're partnering with OP Labs to implement native interoperability, which will enable single block cross-chain message passing among Superchain L2s for chains outside the Superchain. So let me break that down. Basically, single block, you'll be able to do a transaction in one block versus when you bridge, there's multiple transactions that need to be done, which means there's multiple fees, right? So basically they're going to make it so that you're on all these layer twos, but it's going to seem like you're on one, right? Hayden Adams gave the example of like, we don't go on the internet and like when you go to a new website or new whatever, you don't know which AWS web server that you're on. When you're on the internet, each website, each page you go to is actually existing within a server, but we don't have to hop back and forth in server. We don't need to know what's going on in the back end. It seems like we're on one internet, no matter what website we go to, no matter what state it's in. That's the same thing that's happening with blockchains right now, and this is what they're helping to do. So it says, for chains outside the superchain, we're working to make interoperability between all chains better through initiatives like ERC 7683, so users won't have to worry about which chains they're using. It will just work. And ERC 7683 is basically like an API that can talk to the other chains. So is the abstract says here, the following standard allows for implementation of a standard API for cross-chain trade execution systems. The standard provides a generic cross-chain order struct as well as a standard settlement contract for the smart contract interface. So basically, it's going to make it so that it seems like you're doing a cross-chain swap. They're just using the API on the back end to do it for you. Might pay a little more though, it sounds like, but I'm sure they'll be able to figure out a way to circumvent that as well. It says cross-chain liquidity will have an even bigger impact when users have simple, intuitive interfaces to access it. Shortly after Unichain's launch, we'll introduce cross-chain swapping into the Uniswap interface and the Uniswap wallet. So they already have the Unichain Builder Toolkit, which is like an SDK. You can start deploying on the testnet. You have all the docs and everything like that. So I'm excited to see what's going to be built on here. So now that you stuck around to the end of the video, let's talk about how this is going to benefit us yield farmers. Okay, so the first thing it's going to do is lower transaction costs for us, specifically if we're using Ethereum mainnet, right? So one of the biggest challenges for liquidity providers on ETH Layer 1 is the high gas fees associated with providing liquidity, harvesting yields, and managing positions. Like it's all expensive on mainnet, and especially if you don't have a lot of money, you can be yield farming and then all your profits just go to paying fees. So since Unichain is being built on the OP stack, it's going to it promises significantly reduced transaction costs up to 90% lower than Ethereum mainnet fees. And part of the reason why I think Hayden Adams and the Uniswap team chose to build on the OP stack is because Base is there, right? In the Bankless podcast video that I was referring to, he was saying how he doesn't believe people should have to go to ETH mainnet first because they have to bridge off of it. It's expensive to do a swap. Is expensive if you go to mainnet and you want to buy something and bridge over. They should go to an L2 first, and the L2 should just handle the settlement on ETH mainnet on the back end. So by being built on the Superchain, Coinbase or Base is also on the OP stack, and Coinbase is the largest American exchange. So people can go straight from Coinbase straight to the OP stack and never have to touch ETH. So by Unichain being built on the OP stack, they get that benefit as well. So people will be able to buy Ethereum on Coinbase and go straight to Unichain without ever having to touch ETH mainnet, saving them lots of money, increasing user adoption and experience. Another benefit for yield farmers, and this is a big one, is improved liquidity efficiency. So the Unichain is designed to be a part of the OP stack like we talked about. Reduces liquidity fragmentation across multiple L2 networks. This is their whole mission, to reduce fragmentation and make it seem like you're on one chain. So if it seems like you're on one chain as a swapper, it's going to be the same thing as a liquidity provider. You'll be able to provide liquidity on a chain, and that liquidity will be able to flow where it's needed. And I wouldn't be surprised if you're able to check a box that says, okay, I want my liquidity used on Polygon, Optimism, and Arbitrum, right? And then it'll allow it to just do it for you versus you're like, okay, I'm gonna provide liquidity on Arbitrum. Oh, but volume just picked up on OP. So now let me sell these two assets, pay a fee to bridge over, pay a fee to provide liquidity again. This takes time and money versus just being in a space where you can just go to where the liquidity is calling you. Because what if you're not by your computer? It really makes a difference in your profits and your time. And it makes it more seamless for yield farmers as well. A lot of people don't like to go on all these different chains, right? It's almost like you can just you deploy it on a chain and you can be making money on a chain that you never even bridged over to or are not familiar with, right? So it'll just make the whole process easier. So I'm excited for this thing to launch. So guys, as they're launching new updates, I'm going to be staying up to date. If you guys are interested in learning how to provide liquidity like a professional as this thing starts to unfold, as the space starts to unfold and things start to get easier, but you still have to get your head wrapped around it. We do have a 13-hour course and a strong community where we do this professionally. We have coaches and advanced farmers. If you're interested in that kind of thing, you want to get access to our 13-hour course that goes over all the profitable strategies that market makers have been deploying for centuries. Get access to our coaches, get access to our tools, our tracking tools, and the tools we use to find the top liquidity pools in close to real time, and our Yield Hunter tool. Click the link in the description, book a free strategy session. You'll talk to me. I'll answer all your questions. We'll see if our program is a good fit for you. If not, hey, at least we'll still get to make a friend. But with that, I thank you guys so much for tuning in. If you got value, like, comment, subscribe, share with a friend. But other than that, I thank you so much for watching. I love every single one of you, and I'll see you on the next video. Take care and trade safe.